Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 12th of August. Fed Williams, Fed should hike this year. In an interview published yesterday, San Francisco Fed President John Williams said that the Fed should keep its basic strategy of gradually removing accommodation. He said that the data in terms of the labor market have been overall very good, and on the inflation front, he sees positive signs too. Even though Fed Williams is not a voting member of the Fed Policy Committee, his views are followed closely as an indication on where the core view of the FOMC members lie. The dollar gained a bit on these remarks and recovered some of this week's losses. Should other Fed speakers sound equally positive going towards the September policy meeting, we could see the dollar gaining further upside momentum. Overnight, China's industrial production, fixed asset investment and retail sales, all for July, disappointed and slowed more than expected. Following the soft manufacturing PMIs for the month, these data offer fresh evidence that the overall output growth remains sluggish and suggests that China's economic recovery is not as strong as estimated. Softness in more economic data could raise the likelihood for a rate reduction by the People's Bank of China, something that hasn't happened since October last year. Recent comments from the bank reinforce this view, with officials indicating that they will fine-tune policy in a preemptive and timely way. The Australian dollar, often used as a proxy for China plays because of Australia's trade exposure to China, came off its recent highs and could weaken a bit more as the European trading desks open. As for today, during the European day, we get the preliminary GDP data for the second quarter from Germany and the Eurozone as a whole. These figures are expected to show an economic slowdown in both the euro area and its growth engine. Eurozone has already published a flash preliminary estimate which showed a growth rate of 0.3% quarter over quarter from 0.6% in the first quarter. Even though slowing growth could raise speculation for further easing by the ECB in the near term, we believe that the bank will hold off for a while, at least until it can examine post-Brexit data. After all, previous measures such as the TLTRO2 program and the buying of corporate bonds have only just begun in June. Germany's final CPI for July is also coming out and is expected to confirm its preliminary estimate. Eurozone's industrial production for June is coming out as well. In the US, retail sales for July are to be released and the forecast is for a slowdown, but nevertheless still to show a healthy pace. After the disappointing GDP data for the second quarter, the robust NFP print for July eased concerns over the US economic momentum and brought forth expectations for the next Fed rate hike. Thus, a healthy increase in retail sales may add to evidence of resilient economic activity despite the expected slowdown. The nation's PPI data for July and the preliminary University of Michigan Consumer Sentiment Index for August are coming out as well. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.